In this week's edition, we will talk about Emaar Properties and their announcement this week in conjunction with Dubai Holdings to consolidate the property business of Emaar and 3 property companies associated with Dubai Holdings together. This will mean either a takeover from Emaar or a merger between the 4 businesses. The process has commenced, although the company has stated that it is yet to make full valuations, due diligence and update on the legalities of the deal. It has provided guidance that the potential consolidation may take up to 4 months, and therefore we believe that the issue will continue to constrain Emaar's share price in the short term. It is important to note that Emaar already has joint venture agreements in place with the Bawadi Group, which is a member of Tatweer, which is one of the companies it is further looking to consolidate with. Therefore, a tie-up makes sense in terms of the working capital between the 2 companies, because cash flow is reducing as the property market has declined, and therefore consolidating the working capital position between the 2 companies would be a favourable outcome. Emaar stated that it has assets worth 68 billion dirhams on its books at present and debt of 10 billion owing, whereas the 3 property companies it's looking to consolidate with has assets of 122 billion and debt of 3 billion. Therefore, in order to make the acquisition, Emaar would have to raise significant capital in order to buy the shares of the 3 companies. Emaar is presently owned 31% by the Investment Corporation of Dubai, a government entity, with foreign ownership of around 6% and free float of 69%. Depending on the terms of the deal, the free float may actually increase in Emaar if more capital is issued to the public, or alternatively the free float could decrease as the government share stake increases. We will not have further details on this until they are disclosed by the company. So what does this mean for Emaar? As an outcome, it is difficult at this point to predict what will happen, because there has been no financing arrangements, no valuation data, and the legalities of the deal are yet to be released by Emaar. Therefore, we prefer at this point to highlight the potential positives and the potential negatives on Emaar stock, and then provide you with a recommendation based upon them. On the positive side, it is important to note that this potential consolidation is a result of the deteriorating property market here in Dubai and the fact that a lot of government-run entities are short on cash flow. Potentially consolidating these companies together may be favourable for scale, for the land bank of the accumulated companies, and for profit margins going forward, and therefore be a positive for Emaar. Also, the fact that the company will be so large means that many funds and investors will be required to hold this stock, and therefore volumes and liquidity will increase, and the share price will find support over the medium term. On the negative side, the fact that this deal will take 4 months to come to fruition, and also because Emaar is one of the highest volume stocks on the exchange here, and effectively another layer of uncertainty has been created around the operational and trading outlook for Emaar, means that the share price may come under pressure in the short term, particularly as we are heading into the traditionally slower summer months. Therefore, to summarise, we believe that the potential consolidation between Emaar and these 3 other property companies may lead to further weakness in the Emaar share price, as we've seen over the last week, and therefore investors over the short term should consider switching into some of our higher quality industrial and property and bank stocks, including Air Arabia, Aramex, Arabtech, Dana Gas, DP World, Aldar, Suru, First Gulf Bank and NBAD. For more longer term investors, we believe that a falling Emaar share price presents an attractive opportunity to gain a higher weighting in the stock. The company has a very low valuation at the present, with PEs of 3.5 times and price to book ratios of 0.5, meaning that strong downside in the email share price is limited below the 2 dirham mark. So that's all for this week. Happy investing and dom arigato.